We are from Group 4. Today, we are going to talk about life insurance and TAKAFUL in personal financial planning. First of all, let me introduce my group member, which consists 6 of us, which are me, Lim Chao Sing, Chloe Chingayu, Mu Jingyi, Teo Jingying, Phua Sing Wei, and Tan Chi Sheng.
Hi, my name is Tan Hussein and my metro number is 24004733 and I will do the introduction. So, what is life insurance and TAKAFUL? Life insurance and TAKAFUL are important for financial planning. Life insurance gives money to the family if the insured person dies. TAKAFUL is similar, but it follows Islamic rules based on sharings and helping each other. So, moving on. Why life insurance and TAKAFUL are important? Both life insurance and TAKAFUL, which help families during difficult times, such as death or when someone cannot work. In Malaysia, with rising living and medical costs, insurance now will become more important than ever. Life insurance and TAKAFUL, they act like a protection for dependents. Many people buy insurance to protect their family. The family may include children, a non-working wife or husband, or old parents. These people need money to live. If the person who works dies, the family can face a big problem. So, insurance gives money to help the family. It helps them to pay for rent, food, school, or medical bills. In Malaysia, some families could still send their kids to school because they had insurance. These stories show that insurance is very helpful and it is a way to plan for the future, and it also shows that love and care to your families. Besides that, insurance also acts like a financial support during unforeseen events. Some, Sometimes bad things happen. People can get very sick, get into accidents, or die suddenly. Life insurance or TAKAFUL help in pay for hospitals, funerals, and daily needs. So insurance is actually making your family stronger when life getting harder.
Hi everyone, I'm Lim Chao Sing. Now, I will talk about the risk management in personal financial planning. There are two ways in risk management, where the first one is reducing financial uncertainty. We can save some of our earnings as emergency funds in order to continue with our life during unexpected events. Besides that, we can diversify our assets by investing our money in different types of investment. This helps to protect money against losses and lower investment risks. Lastly, we can also have budgeting and contingency planning where we prioritize essential rather than want. Second, transfer financial risks to insurance providers. We can transfer it by purchasing different types of insurance. Life insurance can help to guarantee dependents' financial if policyholders did. Moreover, medical and health insurance. This insurance helps policyholders to cover high medical costs. Lastly, disability income insurance. It can supply money continuously for disability policyholders to support their life, meanwhile reduce their financial burden. Now, let's move on to types of life insurance and TAKAFUL products. There are 6 types of life insurance. The first one is term life insurance. It is a popular type of insurance and is cheaper than whole life insurance. It's suitable for short to medium term financial commitments. It's also similar to term family TAKAFUL, which follow the principles of Wakala and Tabaru. In short, term life insurance is an insurance with low coverage costs for policyholders go through certain life periods, such as debt repayment or child rearing. Next, whole life insurance. It provides lifetime protection, which allows the policyholder to borrow or withdraw the savings component. It's same as family TAKAFUL plans, which the gains distributions follows Wakala and Mudarabah principles. It also can be used for long-term financial estate planning as well as emergency fund. Now, I will pass it to my fellow member Jingyi. Thank you.
Hello everyone, my name is Mujin Yi and I will continue to explain the remaining types of the life insurance and TAKAFUL products. For number 3, the endowment policy. An endowment policy is a type of insurance that offers the both protection and savings. It pays out a lump sum either when the policy ends or if the insured person passes away. For example, if you are saving for your child university fees in 15 years, this plan will help you to build the savings while keeping you protected. Number 4, the invested link policy, or we call ILPS. ILPS use part of your premium for the life coverage and the rest is invested in the unit trust funds. This means the policy not only protects you but also helps to grow your money based on how the market performs. Over the years, ILPS become more popular as they offer flexibility, allowing the policyholders to choose investment funds, adjust the coverage, or switch the funds depending on their goals. For example, when the market does well, the policy value can grow, but if the market drops, the value may reduce too, so it suits people comfortable with some risk. Number 5, TAKAFUL versus the conventional insurance. TAKAFUL is based on the mutual cooperation and follow the Islamic principles, so there's no interest or gambling involved. People contribute to a share fund to help each other during the loss. In contrast, conventional insurance is a commercial contract where the insurer takes on your risk and aims to make a profit. Takaful is best for those who want Sharia compliant protection, while the conventional insurance is widely used across the financial market. Lastly, riders. Riders are add-on features that give the extra coverage. For example, you can add critical illness cover, hospital income benefits, or a waiver of the premium in case you are disabled. So rider lets you customize your plan based on your personal needs and the life situation. So that's a short overview of the types of the insurance and Takaful products. Thank you.
Now I'm going to share about the method to determine insurance needs. So first is value of human life method, which we calculate the present value of a person's future income that will be lost upon their death, and this provides us an estimation of an individual's economic worth to their dependents. Next is family needs method, which we estimate the amount required by the family to meet their financial needs minus any available resources. And last is rule of thumb method, which it is a method for quick estimates with guidelines, including replacement income and adjustment period. So here we have a real life scenario where Ali is a 35 years old father earning a monthly salary of 4,800 ringgit. So he has a wife and two children, and he allocates 80% of his income to support his family. He planned to retire at 60, so that means that he has 25 working years left before his retirement. And he also requires 75% of replacement income in the event of his demise, and also a 6-year adjustment period. So given all these information, we calculated the insurance need estimation using various methods. So here is the result of a different method. So we have a 649,000 using value of human life method, 674,000 using family needs method, and also 259,000 using rule of thumb method. So as a conclusion, family needs method is the most comprehensive one as it considers all the different aspects that we have to consider in order to ensure that we have all the insurance cover. However, the human life value and rule of thumb method provide a useful benchmark as they are easier to be calculated. So for an effective personal financial planning, a combination of all these methods along with professional advice would be recommended.
Now I'll be sharing some real life cases about life insurance and takaful happening in Malaysia. There's been a lot of discussion about making healthcare in Malaysia more affordable, and the insurance and takaful industry is pushing for some major reforms. One of the biggest ideas is the DRG pricing. It basically means hospital charges would be standardized based on the types of illnesses, so patients won't get wildly different bills for the same treatment. Besides that, they suggested co-payment, where patients pay a small part of the cost and making hospital prices for common treatments more transparent. Another key point is regulating medicine prices, which we all know can be expensive. The whole point here is that everyone has to work together to make sure that healthcare stays fair and sustainable for the long term. The second case is about a challenge faced by the takaful industry. According to MTA, they could potentially lose up to 800 million ringgit in business opportunities because of a temporary cap on medical insurance premium increases. This 10% cap was introduced to control medical inflation in Malaysia, which has been rising really fast, about 15% in 2024, which is even higher than the global average of 10%. For companies with large medical insurance portfolios, this cap makes it harder to adjust contributions to match the real cost of providing healthcare. The cap will remain in place until the end of 2026. The MTA explained that this 800 million figure isn't an actual loss of profits, but rather a missed opportunity for growth during that period. Now let's move on to the general practices we see in Malaysian households. About 48% of Malaysians have conventional insurance, while about 47% have takaful. While many people go for takaful because of religious reasons, other choose it because of the service. But affordability is still a big issue. Most people spend below 500 ringgit a month on premiums, but for the B40 income group, even that can be too much. Often, people only start getting insured after big events in their life. Some may even stop their coverage halfway because of financial struggles. Lastly, what influences people to choose the couple? Of course, income plays a big role, but other things like whether the provider is trustworthy and whether the plan follows Islamic principles are also key factors.
My name is Chloe, and today I'll be discussing the importance of long-term financial goals. When we talk about long-term financial goals, it is plan objectives typically set over 5 years plus, such as retirement, education, or real estate planning kind of thing. There are three importance to having long-term financial goals. The first one will be providing financial direction and discipline to a person. Second, it reduces our uncertainty for future life stages, such as students who are about to enter the working force. Next would be to help manage large unavoidable costs like debts from the bank stuff. There are several applications through life insurance and TAKAFUL. For life insurance, it ensures us to have goal continuity despite death or disability that happens anytime in our lives. Such products will include term, whole life, and endowment. Example to it would be education plan that pays out once our parent passes away. However, for Takaful, it's a Sharia compliant financial protection where it combines savings and risk sharing called Tabaru. Takaful aligns with goals like Haji funds, education, and estate planning. There are certain examples for the application. First one, in terms of retirement, Takaful retirement plans ensure income generated. In terms of education, structured savings and protection is provided. And lastly, for estate, it provides liquidity for inheritance called Farad. In conclusion, through this report, we have thoroughly examined the roles of life insurance and takaful in personal financial planning, especially within Malaysia's cultural and financial context. Both serve as a crucial tool for managing risk, providing protection against unexpected events, and supporting long-term goals such as retirement, education, and wealth transfer. We also explored various insurance products, including term life, whole life, endowment, and investment-linked policies, as well as different methods to estimate insurance needs. Additionally, we analyzed real-life cases and discussed current issues affecting Malaysia's insurance and takaful industries. This project also strengthened our research, analytical, and teamwork skills. Most importantly, we learned the importance of tailoring financial solutions based on individual needs, circumstances, and beliefs to achieve long-term financial stability and security. That's all from us. Thank you.